Hey, everybody. Welcome to the program. I've got my good friend Russ from Dapper Dividends with us tonight. We are excited to be with you guys. It's going to be a fun night. And there's no telling where this thing will go. You know, when you get two people on here, there is absolutely no telling. So, Russ, maybe I think everybody knows you already. But for those that don't, maybe give a little bit about yourself.
Well, I was born in Berwyn, Illinois, April 20th,
Maybe not that far
1978.
back.
Yeah, what's up, man? We'll keep it clean. We'll keep it above the belt. Uh, I have the Dapper Dividends YouTube channel, podcast, newsletter, and such and so forth. So, yeah, here to talk some pros and cons about dividend investing, right?
Fantastic.
There's always a con to everything and a pro to, I don't know if I have pros to everything. I don't want to go that far, paint with a broad brush, but we'll do it. We'll do it for tonight. We'll stick to the realm, to the rubric of dividend investing. But there's
There you
always a
go.
good and a bad. You just got to look for what those are.
Yeah, so that's good, and I'm looking forward to this discussion because, I hear a lot of people talk about in our sphere, we hear a lot of people talk about the pros of dividend investing, right? So, the folks that we listen to, it's like, you got to be a dividend investor, but there's also people who are on the con side of dividend investing. I thought it'd be kind of fun to kind of kick around what those pros and cons are, and let's just be real. And I mean, that's kind of the way I roll. I don't like to sugarcoat it. Let's just put it the way it is, right?
Hell yeah,
So
man. Well, we don't want to get all philosophical here, but you should always be challenging your widely held beliefs because, as you know, somebody I'm very fond of, Charlie Munger, dude used to celebrate when he would prove himself wrong. Why? Because
mm,
when you're wrong, you feel like you're right. So being wrong feels exactly like being right, but you don't know that you're wrong until it's proven to yourself that you're wrong. So,
so
that's
does that mean he's always right? Even if he's wrong, he's right.
well, that's why I used to tell Warren, you're smart and I'm right. So,
Yeah, there you go. All right, well, I'm going to kick something on the screen here, and maybe we can just kind of kick off with the pros and cons of dividend investing. So here's some of the pros that I found, and maybe I'll just take one, and then Russ. I don't know how we really haven't rehearsed this, folks. We are just you're seeing this live, right? So anyway, one of the pros is that it offers you a regular source of income, and so that for some people is important, for some people it's not, right? So for folks like me, who's retired, and sometimes I do spend my dividend income, and if that's the case, I need it to come in on a regular basis, and if I don't spend it, you know what, I get to reinvest it, so that works out pretty well.
yeah,
Anything
and
that jumps off of here for you,
yeah,
Russ?
on that first one, I mean, I think for a lot of young people, something a lot of us can miss is we want to get that passive income going. But if you're not planning on living off those dividends anytime soon, yeah, it can be nice to grow them. But, and we'll tie into some of this others later, but, some of the growth stocks, if you ride them up, you get them real big. You can always sell them off when you're older and just buy some passive income then. But yeah, you might not have the same yield on cost, but there's such an interesting argument that we can. Some of you guys in the chat can delve into and let us know what you think.
Yeah, there you go. So it also gives passive income, and really at all ages, I think passive income is helpful. So if you're young and you're raising young kids, you got a family, you got sports games to go to. There's a lot that goes on in life, and having passive income is actually not a bad thing. That's my thought.
Here, here.
They can carry fewer risks since they are more financially stable. So typically companies, and this is all typical, this is in general, you can probably find exceptions to every rule, but typically companies who are paying constant growing dividends every year for many years are typically more financially stable than companies who maybe are just starting out and are growing their product and trying to make a name for themselves.
Yeah, absolutely. That's true. I mean, a lot of these small microcap companies that are trying to grow and trying to get big, they're going to have to use a lot of that cash to plow back into their business to try and grow it to become the big businesses and, build that moat, build that competitive advantage. Some of them can't always do it, but, sometimes it's easier for businesses to buy the moat than it is to build it. So I agree, man. Yeah, it's a weird thing to say, but yes, traditionally, most of the companies that pay a dividend are bigger and more stable and are kind of at the end of their growth cycle.
Yeah, yeah, that's true. So another one is that dividend growth. So as a company grows its dividend, it is a way to help fight inflation. So if inflation is running at 5% and your dividends are growing at 6%, guess what? You're getting more cash next year than the actual inflation. So it's a way to actually pass inflation. So that's a good thing. It's better than a sharp stick in the eye. But you know, but if you don't have dividends, then you really don't have that. You don't have that additional fight for inflation. So
Yeah, man, it's a bit. I think that's a big one. That's something I've been looking at too at dividend growth. I've been looking at 5-year CAGRs, the compound annual growth rate, looking for those to be at least beating inflation, even if it's minuscule. You gotta be showing me that you're gonna raise that dividend faster than inflation. If one of the reasons I'm investing is for passive income. So it's a
yeah.
good point.
Then you can take that cash and you can reinvest it and or you can save it or you can spend it. I mean, you've got the option. It is very flexible. So if you got the dividend and you wanted to reinvest in the stock and buy more of the shares, hey, it's all on you, man. You get a lot of flexibility with the dividend.
Yeah. No, here, I mean, well, I don't know. I can't build on that. Do whatever you want. It's your money. It's your life. You want to go down in the liquor store, or you want to go to church and give it back into the community. It's all up to you, people, right?
Yeah. Hey, and this is the one that is really cool to me, Russ, and that is that it offers more than one advantage. So, for instance, if I have a dividend paying stock, it not only gives me a dividend, but let's back up for a second. Usually, the companies that I'm looking for are those that are growing their dividend as well as growing their earnings, right? I want both. And so typically those kind of companies are going to be growing my income stream through the dividend, but also growing in share price appreciation through making the business better. That, my friends, is worth the price of admission.
Yeah, and they're returning capital to the shareholders, right? So
Yeah.
it's a great thing also when you look for. I think one of the twin engines that we like to see as shareholders getting our money back is the dividends, but also the share buybacks. And I don't know. I know your thoughts on. I know there's the boilerplate thought on buyback of shares, but honestly, it should be done when the stock is cheap or under its intrinsic business value, because then you're creating additional shareholder value the next day after doing that immediately. But if you're buying it when it's overvalued, right, you're kind of destroying shareholder value. Now I know it's totally subjective. I mean, we would prefer that they would buy dollars for 90 cents and not dollars for $1.10. But I know people like, Buffett talked about he should have probably sold out of Coca-Cola when it was stupidly overvalued in the 90s. But it worked out. Like, yeah, maybe it was overpriced in the 90s, but you hold it for 30 years. It's a good business. So that's where I sometimes struggle with the whole intrinsic value thing, because it's all about the future and what's going to happen years and years down the road.
Yeah, I heard Warren Buffett say one time, we really won't know the intrinsic value until 50 years from now. So, you just kind of do your best, right?
Yeah, and it's a range. That's why I kind of laugh when, we all do that. We use the discounted cash flow analysis, whatever, and give it an exact, sometimes 2 decimal points. But again, I'll go back to Warren. Like, he would say, if you ask him and Charlie to give Berkshire's intrinsic business value, they would probably be within 5% of each other. It's a range. There is no specific number. It changes on a daily basis, quarterly. yearly. It's always changing up and down. So you just get that range, like I think they said, it's kind of like when you see somebody that's really I'll try and be PC, somebody that's grossly overweight, you don't need to put them on a scale to know that they need to lose weight. So it's kind of like that. It's just a range. There's no one exact number or metric. Like people like to put a price on it. So yeah.
Yeah, good job. So and eventually they'll pay back the initial investment. So Russ, how does that work? How do they do that?
Well, you get your money back. I mean, you're getting portions of the profits back, and I don't know what case in point. If you get, I'm really bad at math. Everybody knows this. They're like, oh, he's gonna try and do some math, and I mean, if you paid, I don't know what's keeping it simple, $10 for a share, and they paid $1 a year, that would be an insane yield. But 10 years, you'd get your money back, and hopefully the share price is over $10 a share, and then you're getting free dividends, and you've gotten your initial investment back. So, but it can be harder, or it's easier said than done, right? So, but it's a fun thought. You got to hold for a long time usually.
There you go. All right, let's move on to some cons, because I think these are as important as the pros. So some of the cons are there's a lower potential for massive returns, and that's usually because these dividend paying companies are in a more mature part of their life cycle. So, if you got a company that is starting a brand new product that's going to go wild, right? They have the potential of growing fast. But typically companies that are dividend companies don't have that same ability.
Yeah, and it's funny too, because a lot of times, again, it's those bigger businesses, and there's a retained earnings test. So when a company keeps a retained dollar of earnings, there's a few things they can do with it. And one of the tests is, can you create more than $1 of current market value with that? If you can, then you should probably just not pay it out and keep it for the business to grow the business. I mean, you can do that through just reinvesting into the business, mergers and acquisitions. You can also pay down debt, carry it as cash on the balance sheet, buy back your shares or pay the dividend. But it's almost like a business is admitting that they don't have any better use for the cash. So instead of letting it sit around and collect dust, we're just going to give some of it back to you, the shareholders, because we all own the business at the end of the day. So we're going to get to decide what to do with that cash, and hopefully we can turn that dollar we get back into more than $1 of market value. So it definitely can hamper the growth potential of a business.
And next, contrary to popular opinion, dividends are not guaranteed. Even the stalwart companies that have paid dividends for 50 years aren't guaranteed. They are actually voted on every quarter by the board of directors. So, there is no contract, different from, let's say, a bond that will pay you X% over a period of time. So. It's
not your Uncle Jimmy giving you birthday money every year, money for Christmas and Hanukkah and all that. Dividends for any reason at any time. If the board, there's any reason it can be cut. They don't like to do it because usually the stock price gets spanked around a bit when companies cut. But that's a good thing to remember. It's not guaranteed.
Hey, that brings up a great point, Russ, and we're going to go off script here a little bit, but that also is a kind of a pro for dividend paying companies, is that the dividend actually has the ability, I guess, to create a bit of a floor for the stock price, because people are investing for that dividend. And so, it doesn't mean the stock price can't go down, but the yield will go up. And as the yield goes up, it attracts more investors, and it kind of slows the decline, so to speak. So maybe if we did this again, I would add that to the pros.
Oh, good catch, man. Absolutely. Yeah. I mean, it's almost like a little bit of a safety net. And granted, case by case, but you have to know why the share price is declining, why people are selling. But if it's a market panic and the bandwagon effect is taken and people are panicking en masse, then it's probably a good time to buy some of these wonderful. That's what I've been waiting for. This stupid thing ain't coming. Every single week, what are we at? Like, I don't think 300 I don't remember the number I read on. It was either S&P or Nasdaq. It's been like 300 days or something that it's. I don't know. I see what I need to. I should get these articles more than just reading a quick headline, so I don't make a fool of myself when I'm talking to all you fine people. But anyway, where were we? I've run my brain right around in a circle, and I don't know where we're at. So
there you go. So we'll move it along here. You can run into high yield traps. And I've actually done a whole show on yield traps. So the point is that if you chase dividend yield, sometimes you get bit because that's all you're going to get, and your initial investment is going to go away. So because the business is not strong, the dividend is being paid, but the business is not strong. They're borrowing money to pay the dividend. It's not a good thing. It's an ugly look, actually.
yeah, I mean, for me, when I see a really high yield, 8, 9, 10, 12, 15 above, I always say it's a bit of a red flag. And I always have to ask why. Why is this not being just snapped up? Because like you said, when things get bought, it pushes up the price. And the higher the price goes, the lower the yield goes. So it would naturally push that yield down. So I always think, like, why is the stock market just not buying this hand over fist? And there's usually a good reason, MPW.
That might be a good discussion later. So there's tax implications, because when you get dividends, you actually and I don't want to get into the details of this, but if you if you have other income other than dividends, you will typically be taxed on your dividends. They can either be qualified, non-qualified. If they're qualified, it's at a capital gains rate. So the dividends can lead to tax implications, and I think that's as much detail as I want to go into on that. Any additional thoughts on that, Russ?
Yeah, well, yeah. I mean, if you want to get into it, everybody, it's
they see the word tax and they go to sleep. You know what I mean?
Yeah, I know. But think of it this way: if the business didn't pay those out to you, then you would decide, right? If they can reinvest into the business and grow the shares more. So if they're paying like a 2% yield, but when they reinvest, they can give you a 3% return. Well, you're coming out ahead. The share price is going to go faster. Maybe they just plow into more buybacks. And every time they buy back stock, your involvement in the remaining assets of the business increases, and you didn't have to do a damn thing extra. So it can be a great way for you to decide when you want to pay taxes. If you don't need the money, and they're not paying a dividend, then when that share price, super microcomputer goes up 2,700%, hey, if you want to sell little bits and pieces, then you can just decide to do it at that time. So, so is when they pay that dividend, nothing's free. There's no free lunch. You're going to have to pay taxes on that dividend, I guess, unless it's in, a retirement account. But otherwise, you got to pay taxes on it.
Yeah, and eventually you'll pay taxes even in a retirement account. You might be dead, but at some point you'll pay taxes on it, right? So, but
I don't know about might be, Kevin. I think we will be at some point. So yeah, I don't know, might. I'd like to nix the word might and lean more into will be. But,
my dad
wasn't
used to say,
fun on a Monday night.
No, my dad used to say nobody gets out of this world alive. So.
Yes, everybody, if you're just tuning in, welcome. We're reminding you that you will indeed one day very soon be dead. So, on to double taxation, right?
Yeah.
We skipped. I'm sorry.
Yeah. Well, this is a pretty simple one, and that is that as a dividend stock, you're owning equity in the company. If you own something like a bond, you would have a better place if the company went bankrupt. So you're taking on more risk with equity investments. You're getting this is basically more risk. That's a con. It's not anything that I worry about, but it is a con. And then lastly, we'll hit double taxation. And just real quick on double taxation, the business gets to deduct every expense they have on their tax return except for paying dividends. So the company actually pays dividend or pays taxes on the income that they pay you dividends on. Then you turn around and you receive that dividend and you put it on your tax return and pay taxes on it again. So there is a double taxation con related to dividends.
Yeah. Well, the government figured out ways to do the double tax, right? Capital gains, right? That's a double tax. I mean, if I earn money and yeah, so there that ties into that because capital gains, dividend income is a capital gain, right? So
Yep.
from what I understand, I hope I'm saying that right, but if I earned money and I had to pay taxes on that money and then with what was left over, I reinvested it and part of that investment comes back as a dividend and I got to pay tax on that, like that's literally a double taxation. So
Yeah.
that might be a triple taxation then because then I'm paying taxes at the corporate level on the business I invest in before I get the dividend paid back to me. So that might be a triple taxation, Kev.
Oh man,
I don't know.
that's
Maybe not.
awful.
Somebody tax professional in here can.
Yeah. So let's do this, Russ. Let's ask the group what of the. So first of all, did we leave any pros or cons out? So let us know that. And then secondly, let us know if any of these are something new to you. If it was like an aha moment or anything, that would be helpful for us to know. So I'm going to remove that from the screen. And now let's go into and see who's here. It's going to be kind of fun. We have Shaping, and Shaping was the first. Actually, he put that in at 7:16 p.m. No, he couldn't have. It was on there before I got on.
He was in the future.
Yeah, it was like 6:30 or something like that. So welcome to Shaping. You were absolutely the first. We have Brad, who's in the program. Good to see you, buddy. Kevin slips in quietly, as he always does, and he sits in the back. He's a pretty quiet guy, pretty shy. So if you see him, say hello. We got another Kevin Mendoza. And Russ here says, how many Kevins can we get? And let's see, we got 3 so far. And we got Michael Swami. Welcome, Michael. Miguel is here. Let's see. Yeah, this is great. Smash the like button, everybody. Thanks for that reminder, Kevin. Good job. Let's see. Oh, Jim Betts. Hey, Jim. Welcome to the program, buddy. Eli, chickens. Let's talk about chickens later. I was going to get some footage of my chickens, and I just ran out of time today. But, hey, guess what? I got footage of bees. So I got into my beehives yesterday, and I thought that would be kind of fun for you guys to see. We'll do that near the end of the program.
Bees are fascinating.
Ready to go.
Bees are fascinating. I've watched a few documentaries on them. Incredible. Hive mind comes to mind.
What's that?
Hive mind comes to mind. The way they think, the way they communicate. We don't know exactly how they communicate. They think it's through chemicals and whatnot. Right. But you got bees that can fly out miles to find a potential new source or just different things, and then they come back to the hive, and then all the bees know exactly how to get to where they went. How do they do that? If only dividend investors were that smart.
Yeah. Yeah, if we could fly out and find great dividend stocks and come back and do the pheromone dance and attract all of the dividend growth investors to it, that would be awesome, man. But yeah, we're not going to do chickens today, but we will do bees. How does that sound? So maybe I'll put a picture of a bee on here or something. I'm sure it is, Kevin. I bet he's responding to something else. So. Oh, the Cookie Monster is here. Welcome, my friend. We've been discussing a few things here of late. Let's see. Greg is here, and Greg's on my Discord. If you're not in the Discord, it's in the comments to this video. Join us. It's free to join. And Greg, I posted in the Discord that I was going to share these videos today. So I think he's referring to the buzz as the B videos. So that's incredible, my friend. Way to go. We love dividend companies. Oh, El Dynamico is here. He's from West Sacramento. He's late, but you can sit back there beside Kevin Rayberg. He's sitting quietly in the back of the room. Here's a good one for you, Russ. Are you ready for this?
Absolutely.
What are your thoughts on Mo potentially being a yield trap these days?
Yeah, most certainly could be. It's looking a little more dangerous. I saw they got spanked today. They were down like $1.50 almost. And the only thing I could see was that I think Philip Morris got hit with a lawsuit about their Zyn pouch. So, but aside from that, they're definitely a melting ice cube. Going back to, I want to say 2007, that their cigarette sales have been declining at least 5% a year, some years more than others. But overall, cigarettes still are 85% of their revenue. Yeah, they're trying to shift into the next generation products, which is like IQOS, the reduced harm, heat not burn, the nicotine pouches, things like that. But, I just don't know if that cannabis they're trying to get involved in. I don't know if that's going to be able to be the revenue beast that cigarettes were, where they've been able to raise prices 4 times in the last year. So I think I have an addiction. I think I'm addicted to Altria's Dividend because I keep saying I'm going to get out. I'm going to do it. I'm like, I'm going to quit tomorrow. No, I'm going to quit next week. I keep saying I'm going to quit, right? It's like St. Augustine said, Lord, give me chastity, just not yet. I just have to have a better exit plan. And we've been waiting for the mid, like $44, 43 and change, 44. And I think at this point I would take 43, and we were getting close. But it's just every time now it's having trouble getting out of the 30s. It keeps getting sucked back down to about the $40 range. And before it was in the mid 45s. And when I first started buying it, it was $50 a share. So I'd like to use that money elsewhere. Opportunity cost we talked about, right? I don't know. I guess maybe the cost of that would be, is your second best idea better than your first idea? So,
right.
And I do have better ideas for Altria, but then it's like you see that 9% yield, but the stock price isn't going anywhere. So it's like this eternal battle, this eternal push and pull that you have to do and think about. And I think I don't like where it's headed in the future. And then the last thing I'll say about it is my wife and I have lost people to cancer from when they smoked when they were younger. So it's just, it harms somebody in the value chain. And that's one of the things we're thinking about. It was in Guy Spears' book, The Education of a Value Investor, I think it was. And he talked about, he has a metric where, is somebody harmed in the value
Russ,
chain?
where'd you go, buddy?
What's that?
Oh,
I'm here.
I think my internet just went wacko because everything went blank. So I'm sorry, buddy. That was my fault.
Anyway, I was just blathering on. We're eventually going to get out of Altria, and so that's the problem when you get other YouTubers on. You just say, "Hey, how's it going?" and then you go ahead and take a break and come back
58
in 25 minutes later. Anyway, so moving along. What do you guys think about?
I think you're. I like where you're headed with Altria Group because. So first of all, full disclosure, I have a full position in Altria for me. And the way I set my portfolio up is I have a portfolio that I focus on income. That is a taxable account. It means that I can pull those dividends out, no penalty. I'm not 59 and a half yet, so I can't really pull out of my tax deferred accounts until, I get to be 59 and a half. But I can pull from that taxable account with no real issues. So I have Altria in that taxable account. It is paying me some really sweet dividends, and I'm loving them.
You're an addict, just like me.
Yeah, I'm an addict. So I think what's given me comfort up until now is that they've been able to raise prices on their product. And I think we're probably seeing a bit of inelasticity in that pricing, which means that that the demand might go down as they raise prices further. So, that's giving me a little bit of a pause. So the way I'm looking at it at this point is I'm looking at a slow exit, and that might take, 2 to 3 years to get out of. But as they get hopefully in that 43, 45 range, I might shave a few shares off, 100 shares at a time or something like that. So.
Yeah, and honestly, I think a lot of it too is the rates. I think that has something to do with it. Most of the high yielding stuff that was safer. Like you said, any equity is not safe. If it's a stock, it's pretty risky. When compared to bonds or some other things. But I think once we know that rate cuts are imminent, then you're going to start seeing yield-seeking investors start coming back in and pushing the price up. But I don't know. Hopefully, it won't be too late by then. But yeah, we're just, I'll still have Altria exposure inside of some funds. But as for owning it outright, I think I'm ready to move on. It's time. I don't think it aligns with my overall investment strategy any longer.
Gotcha. Yeah, it fits in the mind, but if it's gonna continue to be a yield trap, it doesn't. So that's a good thing. All right, so we got Billy here. Now, Billy says good morning, and that's because Billy is in the Philippines. So It is morning for Billy, and it's good to see you on here, my friend. He also is selling off Philip Morris, Altria Group, as well as Whirlpool. And, I'm kind of there with you on Whirlpool, Billy. I'm looking for, a place, I guess, to start jumping off of Whirlpool. I'm just not ready to do that yet because as soon as this economy turns, Whirlpool is going to come back. But I just have to wait on it. But I'm not going to wait terribly long.
Wasn't Whirlpool just removed from the S&P 500, right? I think they got the boot.
Oh, I don't know. Maybe so.
I think they got the boot. And, oh, man, years ago I read a study that showed I could muck it up, but this would be a great topic. When a company is removed from, I think it was the S&P 500. Oh, no, it might have been the Dow because Amazon was added to the Dow and they kicked Walgreens out, I think. So I think it was the Dow. When a company is added to the Dow, then they don't do as well in the near future. But the company that was booted actually does well, and you think it would be flipped. Yeah. Huh. I could have that backwards too, so don't anybody take that with a grain of salt and run out and buy Walgreens. Do some Googling or ask ChatGPT at least before you do that.
Yeah, but, there you go.
Yeah.
Let's see. Well, here's a quote. Jim puts a quote out here from Charlie Munger. All I want to know is where I'm going to die, so I'll be sure never to go there. That's actually a pretty good quote. I like that.
Yeah, Charlie's dad used to say that, so he's... This is what happens when I'm gonna someday start dressing and looking like Warren or Charlie. I mean, I'm as you guys know, I'm going through the annual meetings again for the second time. The first time around was just listening to them all, taking it in, and it's amazing what I've missed so freaking much. So now I'm doing it where when I listen, as soon as I hear something, I got my little sheets out or spreadsheet. I know I could use notes or something, so whatever. I'm old school that way, but yeah, I'm up to like 700 notes. And it's insane. Wow. I just started 2014 today, so yeah. Anyway, I don't know what that means, but
I think they call that being a nerd, but
it's probably.
And I am one. That's why I know.
Yeah, it's probably obsessive. It's probably not healthy, but anyway, so.
Yeah, so when I first read this, I was like, I don't really understand this. So a con that we missed is that reinvested dividends generate more dividends. And then he says a pro is that reinvested dividends generate more dividends. So I think it's both. And I think that's actually a pretty good point.
Yeah, reinvested dividends generating more Coca-Cola dividends is probably a good pro, but reinvested dividends generating more MPW dividends might not be so good for the long run.
Might not be so good. Yeah, exactly. Hey, Fast Eddie's in the house. Hello, Fast Eddie.
Hello, Eddie.
Cookie Monster loves honeybees. Well, I'm gonna hear before too long.
My God, that avatar! I don't think that's appropriate.
That's the Cookie Monster, right?
I'm taking these. I think it says Cookie Monster. That's not very. There's not very nice. I think it's.
Is it not? It's like Sesame Street, man.
It's demented. I love it. It's twisted. But this is a family show. That has no
it is
place
a family show. Yeah. So Michael found us a bee. That is fantastic, man. All right. Billy says he added to Hershey's. So that's good. I did not. I was actually gone all day. Not all day. I was here earlier this morning. So I didn't actually see how.
I was tempted. It was almost down to 181 and change. I thought we were going to hit the 170s, but I think it closed up around 183, 184.
Okay.
I still haven't started a position. I have a bunch of cash sitting around waiting, and we're gonna. I told you guys we're gonna be buying a car, so I'm a little on the fence about investing that because we don't know what, when, how much, and all that. But yeah, I mean, 178 I think is the 52-week low, 178 and change for Hershey.
Hmm.
But
Yeah.
what do you think about that? I mean, this can't all be from just the inflated cocoa price, which I think looks like a super microcomputer or something, right? The stock chart on
Yeah.
cocoa hitting the all-time high, but it'll correct
Yeah.
eventually.
I think so, and I think it's. I do think that there is a lot to do with that because it's just a. I don't know. It's a conceptual thing, right? That investors get into. They see the chart doing this, right, and they think it's never going to end. It's going to
Yeah,
continue.
yeah.
So, but there's, when I think about Hershey, though, just to be real, when I think about Hershey, there's how much growth is left in chocolate, right? And so they're going to need to move on. Now, I know they have these salty snacks that they have, but is there something else that's going to really help them from a growth perspective? So maybe that's part of it as
They're
well.
still growing. I mean, I guess they're
Yeah.
just gonna, raise prices, make their acquisitions, like they acquired Dots Pretzels and
Hmm.
Pirate Booty. I forget the name of the company that brought them Skinny Pop. No, Skinny Pop is Pepsi. No, Smart Food is Pepsi. Maybe it is Skinny Pop.
I think it is Skinny Pop. Yeah.
Yeah, I don't know. I get
Yeah.
confused with all this stuff.
So
It's all
that
blends in my head.
So, Billy, it's great to see. I am pretty close to adding some more shares. I think mine are at I bought, I don't know how many I bought, but I bought some at around 183. That's been right before Christmas. I think I did a video on it around Christmas time. And so now it's back down to that area. If
Yeah.
it hits 180, you can pretty much be sure that I will have added some more shares. So that's kind of where my target price is right now. Is if it hits 180, I'm probably doubling my investment.
At least for a little while, I think, like we said, there's going to be a floor for Hershey. And as long as the fundamentals of and that's a key thing. If you're going to buy individual businesses, you have to know something about the fundamentals of the business and the direction that the company's going. Like, does it have a competitive advantage in your mind 5 and 10 years out that it's going to be able to use to still keep earning these, what they're earning? And, that sounded awful. Are they going to be able to still keep earning what they're earning? That's the question we all need to know. And when you speak a million miles a minute, that's what happens. So,
Hey, you want a really good time? If you want a good time, Google the cocoa process, the process of making cocoa, growing cocoa. And it's really fascinating because there's only certain parts of the world that it grows in, right? And so some of that's in Africa, some of that's in like South America. So you've got these growing regions that aren't like all over the world, but fascinatingly, some of the they actually propagate. If you know what that means, it's they grow plants in London or England. I don't know if it's specifically in London, but they grow those plants in England and ship them to these places that can actually grow them. So it's a fascinating supply chain. And you get to see how it's made. You get to see them like opening the thing up, and then how they dry them out, and the quality control and all of that. It's a fascinating process. So
yeah, I
if you
think
want a good
it's
time, check
I
that
think the
out.
Liberian coast is where they grow most of that. And from what I understand, like there's been a lot of it's the weather that's been awful for
Yeah.
the crops this year. So that's part of the reason why we're seeing
Mhm.
cocoa at I think all-time highs.
Yeah. Yeah, and the weather has a tendency to change. So I just don't think that's going to be around forever. So, okay, we got something about bees here. Jim says, I just watched the movie The Beekeeper with Jason Statham. Have you ever seen that, Russ?
Never.
Throughout the movie, gave some interesting bee facts. Good movie. Not sure what the body count was, but giving John Wick a run.
Yeah, I
All
know
right.
Jason Statham. It's not my type of movie. I don't know. That's not my kind of thing. I knew there's going to be, I doubted he was in some, avant garde beekeeping movie where he's in like some, dangerous love tryst or something. But Yeah, it's just going to be a lot of fighting and people, Anyway,
Yeah, yeah. Well,
interesting.
I've never seen it, and but I will say that bees are fascinating. So, all right. So I've got Jacob here. Well, first of all, welcome to the program. He says he's looking at a stock that's paying 19-cent dividend. Is that a good starting point?
Yeah,
I would say.
I asked him for what it was because
Oh,
that's not.
okay. Is there more down here?
No, he hasn't got it yet. He said he was going to look it
Here
up.
he is.
Yeah. So.
Oh, he said he's
Oh,
going to find it.
PGHY.
Okay.
There he is. I can
There
take
it
a peek
is.
while you're.
There it is. I'll never figure out where I was before, but here we go. It says PGHY. I don't know what it's about, but I just wanted to start a dividend stock. So I was tunnel visioned, he says. Do you want me to pull it up or you want to?
Yeah, go ahead. You can pull it up.
All right, let's do this. I will.
High yield corporate bond ETF. Yeah,
Okay, what do you guys want to see it in? You want to see it in Simply Safe? That's where I typically go. PGHY. Invesco, I'm going to remove the comment here so we can see this better. Invesco Global ex-US High Yield Corporate Bond ETF. There's that. Now it's not any better. Yeah, that's. I don't know, my friend.
I don't know. I think open it up. Open the about up real quick. I mean, that sometimes helps me get a little feel for it. It's.
Yeah, let's see. It's an exchange traded fund, which we know in the title. Invesco invests in fixed income markets of a global region, invests in U.S. dollar denominated fixed coupon, short-term, non-investment grade securities that are issued by corporations, sovereign, sub-sovereign, supranational. Yeah, I think that could be a little
Too
bit
hard,
higher
pile.
risk.
Too hard for me to understand. I don't know. That's way beyond my. It's too. There's a too hard pile for me that goes into it.
So first of all, the things I would point out here is that non-investment grade securities means that they have been rated by let's say S&P, so Standard and Poor's, Fitch, and who's the third one?
Did you say Moody's?
Moody's, yeah, Moody's is the third one. So they have been rated by those, at least one of those entities, as non-investment grade. That means that they are below, if it's Moody or if it's S&P, it's below triple B minus. So it would be like double B or whatever. So, I would tend to stay away from things like that. They do have, potential of good return. It's just a more risky part of the market. So, and then, these sovereign, sub-sovereign, supranational, quasi-government entities, that
I honestly don't. I don't even know what a quasi-government entity is. I was in a band, coincidentally enough, called Quasi-Government Entity, though in high school. It was a Moody Blues tribute. So,
nice. Yeah.
Come on. There's no. I can't even name if there was a gun to my head a Moody Blues song. It's a band, right? I just pulled that out of that came to my head. It came to me from the other world. The Moody Blues. I don't know. Is that a band? I'm serious.
The Moody Blues?
Yeah.
Yeah.
Okay, good. At least they got something right.
You got it, man.
Silly.
You're all over it. So 56% they grew the dividends last year. So I don't know, brother. I think for me, let's see, Jacob, that's a little bit more risk than I want to take on in my portfolio. If you're young and you got a little bit of time and you just want to take a shot, I don't see that as a problem, but at least know what you're getting into. So, all right, let's see. Fast Eddie's got something here on. Let me get rid of this. Hold on. Boom. All right. NVIDIA bought at $797 and it was up to $857 today. So he bought it, about a week or so ago? So I think he's saying thoughts is the question is, should he sell, right? Or should he hold?
Well, I'll say
or buy more.
nobody ever went broke locking in profits, and this thing has just gone parabolic. I think we're beyond the moon right now. Could it go further? Can we go to Mars? Absolutely, but
Yeah.
I have no idea at this point. I mean, this is almost uncharted waters. So if you're comfortable with profits, that's what I would ask you is if you sold and you took those profits, would you be okay if it went to $900, 1,000, whatever? You got to make your peace with that. So, but just know, like, it's never been a stupid thing, taking profits, locking in gains.
Yeah, and when I look at this 797 versus 857, that's like $60, right? So
Well,
$60 off of 800 is it's not really enough, I don't think, to take the profits on. I would,
yeah.
I mean, if you believe in it, I would ride it further, personally. That's my thoughts. But what do I know? I don't own Nvidia. I do own it through an ETF, and I chose to do that because when a couple of years ago, I was looking at the semiconductor market, and I was like, I don't know who to pick, right? I mean, there's all these companies out there. I don't know who to pick. So I'm going to go with an ETF. And so I own a piece of a lot of these semiconductor companies. So, and I'm making a lot of money on that, but not as much as if I just bought Nvidia.
Right.
Yeah. I'm not crying about owning that ETF.
We got exposure. I got exposure. So
That's right. That's right. Let's see. Kevin Mendoza's got a question here for either of us. He doesn't want both of our opinions, just one of them. So I own DEO stock. If for some reason they stop, I'm sorry.
It's Diageo.
Diageo.
Guinness, Johnny Walker, all that. Yeah.
I gotcha.
Liquor.
If for some reason they stopped paying a dividend, where would the ADR tax fee come out of? It is usually taken from the dividend.
Yeah, so that he's talking about the American Depository Receipt Tax. Yeah, I don't know. That's a good question because the bank, there's some kind of financial institution that will basically buy the stock over there and allow us to buy it here with the receipt. But I don't know, man. That's a good question. I mean, I guess we would have to look at a foreign traded stock that doesn't pay a dividend here. That's an ADR.
Mm-hmm.
Oh, you know what? Actually, no, I do know because I used to hold NEO. NEO, the electric Chinese EV, is an ADR. And I would just get charged by my brokerage. So that's where it came from. So I don't even know if it comes out of the dividend. Because I do remember seeing that line item on Schwab. It would say like whatever. It wasn't a lot. 3 cents. I think I had a couple hundred shares. It was minuscule, or whatever it ended up being. But there was a ADR management fee, it would say. So they just charge you. You got to pay it.
Yeah.
Maybe it was more than 3 cents. I don't know. I remember it was enough where I was like, what the hell's this? I've never seen this before.
Yeah, I've chosen, other than in my, I own one international stock, not international, one foreign to the U.S. stock. A lot of my stocks are international, right? Johnson & Johnson is international, but it's based in the U.S.
Yeah.
So, so I own Medtronic, which is actually, it's weird. It's headquartered here in the U.S., but it is actually I think it's Irish.
Yeah, I think it's domiciled
Danish.
Somehow. It's I think in Ireland they're domiciled Irish. For tax purposes. They're trying to.
Yeah, but since it's in my Roth, I don't get any fee for that. But other than that, the any kind of foreign tax stuff, I just don't want it complicating my tax situation. It's complicated enough, so I just stay with the U.S. companies personally.
Yeah, it's just, I think the whole thing is if they're not listed on a U.S. exchange, the ADR is a way for us to buy them. So with NEO, because they're not listed on a U.S. exchange, then with the ADR, I think they're on the Shanghai exchange or something like that, whatever it is in China. So we don't have to buy on the Chinese exchange. We can buy the receipt. That's kind of like I don't know, this might be a backdoor way to buy some of these stocks. Yeah.
So the next one here comes from Burn Survivor 88. He picked up a share of Pepsi today. He says he's a Mountain Dew guy and loves Lay's. So you picked up the right stock, my friend.
Yeah, I think they're gonna
Yeah.
be all right. They're
So
good.
you still own Pepsi, right,
Still own
Russ?
my 100 shares, and I unfortunately it would have been nice if I was a little bit clairvoyant to have sold when it was at almost $200 a share, and then buy back in down here. But yeah, anyway, my cost basis is about 152, I think, a share.
Okay.
But that's not including all the dividends I've gotten. So we didn't cover. We kind of covered that. So I have tracked it. I've called it my adjusted yield on cost. So all the dividends I've been paid by PepsiCo, I've reflected that as lowering the share price. So right now it's like 136, is it? We'll just say if it's $1.36 a quarter, then that means every quarter, every share is being my cost basis lowers by $1.36. Now they don't track that on Schwab. You'd have to track that, but eventually one day I will be paid back for all those shares. It might take 25 years or so, but it'll happen. So,
Okay. Well, hey, here is another one. Matchy is helping us say that SMCI replaced Whirlpool in the S&P 500. So that's good to know. I didn't have my eye on that ball. So let's see. I'm going to skip a few things because I got to leave time for my B videos, right?
yes.
Oh, we already got that one. So Gendry is saying that they are buying like crazy. CHRW.
Is
I
that
don't even know
C.H.
what that is.
Robinson, the transportation company? I'm not.
CHRW.
I think it might be C.H.
CH
Robinson
Robinson. Yeah,
Trucking. Yeah,
you nailed it, man.
I think they're headquartered
That's
on the
it.
West Coast, air freight and logistics.
Yeah, they got a 83.46% dividend yield.
Hey, go to the about real quick. So let me see if my brain works. If their headquarters go down. Ah, I was way off. Eden Prairie, Minnesota. I think I'm thinking of XPO Logistics or something.
Okay.
Anyway, just go by that. Yeah, sorry.
Yeah, it's bad when you quiz yourself,
Yeah.
They downgraded it in January. So let's see what they downgraded it from. It was 92, now it's 80. So, I don't really get too bent out of shape on these numbers, but what I do get interested in is that it was very safe. Now it's only safe. So I would want to understand what caused
Looks
that.
like they haven't grown the dividend since November of 22.
Yeah. That's right.
So that's one of the reasons probably why. But yeah, old business. They've been around
Yeah.
for a while.
Yeah. So, good luck with that. And let us know how it goes, because I just don't know much about them. I can't really help you with that one at all. So sorry about that, my friend. Let's see. Yeah, we saw that already. Okay, here we go. Miguel wants to know, inquiring minds want to know, if you had to choose on supermarket chains, which one would you pick?
Man, I mean, does Costco count? I don't know if we can count. They're the second largest, I believe, grocer in the United States, but I don't know. Kroger might be all right. They're pretty big and solid, but supermarkets don't excite me all that much. I don't know. I mean, I know we need them, but they're low margin and.
Yeah, I actually used to own Kroger and sold it about, I don't know, a year and a half ago or so. It had really grown, and I just didn't see any real future for it. But I'm sure it has gone up and down. Once I sell a stock, I really stop watching it. You know what I mean? It's like it can do whatever. So
super smart. I think every time I sell a stock, they should just delist it from the stock market, so that way I don't have to play that game where I look a month and weeks out and be like, son of a bitch, why did I sell? Damn it.
Yeah.
Can't do that. Don't even look.
Let's see. So El Dynamico has thrown out a gauntlet here. I think he's referring to Gendry.
Yeah. No.
It says he should start with SCHD.
Jacob Harrison, I think he's talking about. He said he was focused on just starting a dividend stock. So isn't that funny?
Yeah.
Like, I know he's a beginner, but We think of it, and I probably would have done something like that too. I don't even know how he landed on something I've
Right.
never even heard of, a corporate ex-U.S. corporate government bond.
Yeah.
I don't even know how, a corporate bond, but yeah, it's just SCHD. That's super simple. Get your feet wet. You're buying 100 really solid dividend-paying businesses, and it's just, yeah, you don't need to mess around with stuff that
Yeah.
too hard pile.
That's right. Let's see what else is good here. Michael Swami says he knows that song.
Oh yeah, I told him I didn't know. He's put Knights in White Satin, so there you go. That's the Moody Blues. So,
There
Michael
you go.
Swami, you're showing your age without telling us how old you are. Congratulations. Maybe, I don't know.
Let's see. Oh wow, this is great. Thanks, Jacob. Free information is a blessing, and
Beautiful.
you know, no, that is awesome. And but just realize that sometimes you get what you pay for, right? Because it's me. I mean, we're giving you what we really believe, but sometimes we're not always correct. So
Less pressure on us too when we don't charge people.
yeah. And Fast Daddy says the magic 8 ball. Absolutely, man. That's what I've got here off screen here. So
They need to
all
make
right.
those with stocks on the little thing
That's a
inside.
good idea. Yeah, then I could get my chickens to pick. So, so ex dividend dad has shown up in the house. So welcome, my friend. Let's see. So one more, and then we'll go to the B videos. Zanotti says, I've been watching Snap-on lately. I like the company and its numbers. Should I care that Snap-on's price is close to the 52-week high? What do you think, Russ?
If it's a good business and you like it, I would say just buy it. And if it drops, then just buy some more. But usually the thing that we forget and we don't like to look at is that a business is at the 52-week high because it's doing something good. It's a good business that people want to be invested in. And more times often than not, from what I've understood and read, is that good businesses are going to keep being in demand and keep pushing to new 52-week highs. So today's 52-week high, eventually a year from now might look like a good entry point. Yeah, we don't know what's going to happen. Nobody knows what's going to happen, of course. But I mean, if it's a good business, it's a good business, and you think it's going to keep growing, then it's going to get pulled up. Its earnings will pull up the share price. So easy for me to say, it's easy for me to spend your money, Zanotti, no problem. But I would just think of that. Is it a good business that you want to be invested in for the foreseeable future? So,
yeah, I think that's right. And when I think of, I mean, it is really hard for me emotionally to average up in a stock. I mean, I've found that about myself. I have no problems averaging down. It's like, oh, that's more of a value, right? But there are stocks that I have averaged up in, and I've been very glad I did. Parker Hannifin is one of those. But it is difficult for me to do that just emotionally. Do you have the same issue, Russ?
100%, man. It's
Yeah.
very difficult for me to average up. Extremely difficult. And I'll put it this way, Starbucks, I just started doing that with. I was buying Starbucks in the low 70s, low to mid 70s. So in my taxable account, it's only like 26 shares, but I think I have a cost basis of 74 or $75. So seeing it at like 92 or 93, so the way you got to think about that, right, is if you did not own this stock, if you had no position, would you be comfortable buying here? And I said, yes, I would be comfortable buying here. But I hate that, man. It drives me bonkers because I know, and I've been doing this with Johnson and Johnson, where my cost basis was like 147, and I've been buying in the high 150s. Every time I do that, as soon as I buy a couple of shares, I go back and look, and my yield on cost went up like 80 cents or something. I'm like, oh no, it's good. It's bringing up my yield on cost. Like it's it's a vanity metric, but
Yeah.
it's like, but the end game should be, do you want to own more of a good business? Like,
Yeah.
damn your yield on cost. Like and this is again, people, I'm struggling with that, but that's what I'm trying to look at it is with these stocks, like ignore my yield on cost. Who cares? If you did not own this stock, would you feel comfortable buying right here? And if you can say yes, then just buy it and don't even worry about it.
There you go. Okay, how about some bee videos? You
Oh
ready?
yeah, man, do it.
All right, let's do it. I'm going to take this off. Okay, so I'm going to actually do this. I think it'll be a little
Hide
bigger.
it or whatever.
And I don't know how to make this any bigger. This was made on my phone, but this is actually me in a bee suit, and I'm looking at the hive from yesterday. So I'm just going to let this play, and you can see those bees, man. They were not happy that I had opened them up, and I'm going to show you a couple of things. So
Would you
first
be
of
happy
all,
if somebody opened your bathroom door and came in and was
no.
looking at you? You'd be upset too, man.
Yeah, that's more like their bedroom and kitchen, But so if you take a look at this right here, just this, it's hard for me to not be educational, right? So you see this, I don't know what to call it. It's like a yellowish tinted thing that's different than the rest. That is honey. So they are beginning to put honey on this frame. This is part of the frame they have not drawn out yet, and this is part of the frame they have drawn out. So when they draw it out, they're gonna either put the queen is gonna lay eggs in there, or they will put honey in there, or pollen, one of the three. So I'll let this play a little bit more. But you see all those bees right there, and you see this yellow right here.
Mm-hmm.
Can you see that? That is pollen on a bee's leg. So that bee has gone out into the flora and it has gathered pollen on its legs and it has brought it back to the hive. Now, this is fascinating. You ready for this? You see this item right here?
Yeah.
That is called a queen cup. And what that means is that they are preparing a place for a queen to be born. And so that's not a big deal for now because it's not sealed off. If that gets sealed off, I'm in trouble because that means half my bees are about to leave.
Yeah,
So,
they're gonna follow that new queen out, or the old one, right?
Well, the new one will stay in the hive. The old one goes and takes half the bees with her. So, so let's just keep moving through this one. So you see the pollen there, and all right. So I think that does it for this one.
I do want to add, because I can at least add a little something to show I'm not that silly, is that I said that's their bathroom. No, bees are very clean. They do their business outside the hive, correct?
They do. Yep.
Even
exactly.
in winter, they'll go out, come back in like really quick.
All right, here's another video. You can see here, I'm going to stop this. You can see all of this brown right here. First of all, that circle of dark brown.
Yeah.
Those are cells that have had bees hatch from them. So they are empty, what they call empty brood cells. These more light brown ones, those are brood that have been capped. They have not been born yet. So they're still cooking. They're still growing. So all of these are going to produce more bees. All of those light brown ones are getting ready to hatch. And then this right here up in this corner and in this corner is honey.
Now those are all the females, right? Those are all the workers.
Yeah.
And the drones, where are they? In recliners drinking beer or something, waiting to be called to mate?
That's the normal thing, right?
They don't do anything.
You see these down here on the bottom that are kind of growing off of the frame?
Mm-hmm.
Those are drone cells. And you can tell because they see how small these are and how big these are. The drone bees are bigger than the worker bees. So they typically will put those near the bottom of the frame, and they'll sometimes hang off the frame. And drones really don't do anything. They don't make honey. They don't. The only thing they do is pollinate queens. So I just scraped them off the frame and moved on.
The life of a drone, right? Even when they're born, the females dig them out and they clean them off. They help them come out of the cell. But the females, they don't get nothing. They have to get themselves out and struggle.
Exactly. All right, so I'll just kind of go through this It looks like I was about to show something, and then I decided to look myself. So, but yeah, you see that is got a lot of honey in it, and then a few brood cells there. So these hives actually were very healthy, or this hive was very healthy. So I basically I flipped the top and bottom box and inspected a little bit, and then you see how they're flying around. They're mad and absolutely needed the bee suit yesterday.
I can't imagine why they're mad. Can
And the
everybody
smoker.
else
See, I have
watching?
my smoker see my smoker. Yeah, so they absolutely. Okay. One more quick thing, right? This is kind of fascinating. You want to see how a bee responds to smoke? It is this one right here. So see these bees on the top? I'm about to smoke the hive. Now watch these bees. So I'm just blowing some smoke, blowing some smoke. They all disappear. They're like, I'm out of here. I do not like smoke. So there you
What kind
go.
of smoke you got in there? Is that
It's
cannabis or?
yeah, now they're inside the hive, eating some Doritos and stuff like that.
Yeah.
So
What is it? What is it though? What's the smoke? Like, is it a
yeah, so
special?
the smoke, what I use, a lot of people will use things like pine needles and stuff, but I use wood pellets like you would use in a smoker, like in smoking your meat on the grill or whatever. So
Yeah.
I use those, and I basically start it with cardboard and then stick those pellets in there. Works great for me. So that's what I
Nice.
use.
I like Cookie Monster. He knows about. Yeah, I was wondering that too. He said you should just crush the cap now. I was thinking, yeah, why can't you just eliminate that? Will they just build another one till the new queen comes? Or
Yeah, I don't typically worry about the cap because once the bees decide to swarm, they're going to swarm. So I've got a couple of swarm traps that are hanging in trees around the property. So my goal is that if they do swarm, I'll catch them and put them back in a different hives.
try and outsmart the bees, Kevin, so they don't
Yeah, just
swarm in your house.
just make an attractive place for them to go, and just put them right back in a different hive. So I
Dude,
have one
Jim,
hive
Jim,
right now, and I'm planning to have up to 6. So
is there a limit? Like, do they?
uh-uh.
I mean, you could just
I'm
keep doing.
yeah, only limited by the amount of time I want to spend on them. So
Yeah, like Jim was. That's what I was saying. Jim Betts is that. Yeah, the the drones are just like Cousin Eddie. They just hang out. They don't do any work. They used for breeding, and that's it.
yeah. Oh man. So I thought at first he was serious. He said, "You're so wrong for showing bee videos knowing I'm blind and can't see them." He said, "Just kidding."
Oh,
That stinks, man.
well,
Thanks, Cell Dynamica.
We do have some visually impaired viewers, though. I
That
do
is
know
true.
that.
That is
I don't
true.
remember who, but
And then Cookie Monster says the queen has a beautiful laying pattern, and she does. She is a really good queen, and so I'm happy with that hive. So we'll see how the summer goes, but I'm really expecting to get some good honey off of this hive this year. So uh, I could talk all day about bees because they are so fascinating.
oh, we were just
But
scratching the surface too.
yeah,
That's
yeah.
crazy.
But these the supers that you saw, the box, that's called a deep box. And so when I put the medium box on, that'll be for honey, right? So that I'll put
Mhm.
this boxes on top of boxes, right? So each box of that medium size can hold up to 50 pounds of honey.
Wow.
50 pounds of honey. That's a lot of honey, man. So if I can get 3 boxes on top of that, that's like 150 pounds of honey. So
Well, then what are you gonna do
fascinating.
with all that honey? You gonna get
I have no
a
idea.
tent at a fair? Like, be like those people, at the what do they call it? The farmers markets
There
and
you
things
go.
you
Sit
see
out
where.
there and chew on a straw, and I have my hat on. It'll be great. I have no idea
Wow.
what I'm gonna do with it. I'm just fascinated with the bees and with the process. So we'll see what happens. So
Well, I get
yeah.
to live vicariously through you about your bees. Then I love
Hey,
it, and us too.
It's good stuff, man.
The funny thing is, if somebody just wandered in here and they saw the pros and cons of dividend investing, and then here's these two guys talking about bees, somebody's going to be really confused. I don't care. It's your channel, though. I love it, man. I'll talk another 20 minutes about bees. But
Awesome.
anyway.
All right, so maybe next time when we do this, we'll talk about chickens. How's that sound? I'll take some chicken videos and show them next time.
Need your chicken picking, man. Your chicken stock picking.
Yeah.
Build a
I got some good
portfolio.
ideas on how to do that, but I haven't moved forward with it.
Dude, that would be awesome if you could build a play portfolio and just, have some of your chickens, just put feed. Like I said, I just write out some names and then whichever ones, however you figure it out, see if they get some good picks there.
Yeah, somebody had a good idea, and that was to take the FinViz, the FinViz that shows the S&P 500 with the blocks and red and green and stuff, and get a big poster made of that, and then put that out in the bee yard, and wherever they poop, those are the stocks that I would pick. So, it's a thought. It's the best one I've heard yet. So. Okay, this will be the last one, my friend. And Kevin Rayberg says to trade the honey for moonshine. I think that's a great idea. So, wonder how much.
That's the problem. See, now we can go into the rabbit hole of currency. See, this is the problem, because what if you've got honey and you want moonshine, but there's nobody willing to trade your honey for moonshine? What do? And that's why we have money, people, because it's a medium of exchange. And if you were a butcher and you wanted to trade for shoes, well, the shoemaker could just outweight you for your meat to go bad, and then you get, he left us. Yeah,
I'm here. I need to switch my battery out. Hold on.
He didn't like me going into the talking about what were we talking about, everybody? Welcome to the Kevin Burgess channel, where we're talking about bees, and I don't know. How are they who has said that? Michael, how are bees like dividend stocks? If you want to tell us, I'd love to know.
Welcome back. The battery went out of my camera, so hey.
You want to go another 2-3 hours? What are you thinking?
Yeah,
see if we can go 24.
We've only been an hour and 11 minutes. No, this is good stuff, man. Russ, I really appreciate you joining tonight, man. I always have a great time with you. It's so relaxed, and and you're real. You're real just like I am, and we're just going to tell it like we see it, right? So that's awesome. I appreciate you joining.
Hell yeah, man. Absolutely. It's always a good time.
All right, man. Well, and then let folks know how they can get in touch with you.
Oh, me. Sorry, reading comments. Michael with his.
Sorry.
We're gonna have to save that one. Bees. They provide product that has value. Yeah, I guess so.
Yeah.
Good point. Just dapperdividends.com. Go there. Everything's there. Or type Dapper Dividends into YouTube, and you'll see my face. So pop up.
Awesome. All right, my friend, and I hope everybody has a great week in the market. So. Let's keep those seatbelts on. It's going to be a bit of a bumpy ride here over the next few months. So, we'll just ride the wave. You only just remember this. This will be worth the price of all this hour and 12 minutes that we've been on. Is that you only get hurt on a roller coaster when you jump off. So, just keep riding the wave.
Heck yeah. Peace. Good
With
time.
that, we'll see you guys.